I'm Rick Farley, and this is PwC's Tax Insights in Brief. Earlier this month, the Department of Transportation released the cents per mile rate and the terminal charge for the first half of 2024 for the Standard Industry Fare Level Fringe Benefit Rules, otherwise known as the SIFL rules. These rules are special valuation rules an employer may use to value personal use of an employer-provided aircraft by an employee. The IRS routinely accepts these rates and publishes them in semi-annual revenue rulings. When an employer allows an employee to use a company-provided aircraft for personal reasons, a taxable fringe benefit has been extended to that employee. Under current law, the employer may choose to value these personal flights by either using the general fair market value charter rate of a similar aircraft or the special valuation rules known as SIFL. It is important that an employer calculate the SIFL amounts correctly because if SIFL is not done appropriately in certain circumstances, the IRS, upon audit, could require the employer and employee to use the fair market value charter rate for personal flights that were improperly calculated. Proper and timely calculation of SIFL has taken on an even greater significance recently. Last week, the IRS announced plans to begin dozens of audits on business aircraft involving personal use with funding from the Inflation Reduction Act. It was stated that the audits will be focused on aircraft usage by large corporations, large partnerships, and high-income taxpayers, and whether for tax purposes, the use of aircraft is being properly allocated between business and personal reasons by the employer. So as for next steps, first, employers should compile the flight logs of the aircraft to determine which flights were used for personal purposes by employees and their guests. Second, with regard to flights that are identified as personal, the employer should calculate the SIFL amount for those flights and report the value to the employee accordingly in a timely manner. For more details, read the attached insight. Thanks for watching. This has been PwC's Tax Insights in Brief.